Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's January 15th. My friend Curzio, just Wall Street Pub Podcast, bring the headlines and tell you what's really moving these markets. Got Daniel Creech joining me today. Dan, what's going on? How's everything, buddy?
Hello, Frank. Good morning, sir. Welcome back.
Yeah.
I got to see you last week via cameras.
That was cool, though, right? That was cool. We did a little podcast there.
It went halfway well. Yeah, absolutely.
After I went to NVIDIA, right, to the NVIDIA conference, which was insane. Comes out how long that line was. I've never seen a line that long to see someone to anything in my life. I mean, I didn't even know the hotels were that big. I taped it for 4 minutes. I think I told you last week. 4 minutes walking, and I just stopped. I was like, there's no way. Yeah, it just kept going and going and going. But I don't know what they were thinking. I thought it was only available to media. So media is like 4,000 or 5,000 people, and this place holds 12,000. I figured, okay, I'll let more people in. I think anyone that attended the CES could go, and there must have been, they filled up the stadium. There must have been at least 25,000, 30,000 people outside that didn't get in. They were probably pissed because they waited online for hours. So it was pretty crazy. But the CES was cool. It's long, I'm there for a while because it's open to the public Wednesday, Thursday, Friday. But for my media badge, I can get there Sunday and Monday and Tuesday to do a lot of exclusives. You get to see a lot of products. I have meetings set up and stuff like that. So overall, it was pretty good. I'd rate it probably a B-. I thought it was going to be a lot better. But I could tell you, the AI theme, of course, was there. And a lot of companies still full of shit. Like, TVs, we're going to use AI, every technology. Your toothbrush is AI enabled. It's like, yeah, everything's AI. But if you look at the biggest companies, Daniel, none of them are there. And Apple's never there. And I think it's so great with Apple because what they do is everyone, I feel like there's marketing their products for iPhones and things like that, and they're never there. That's fine. Right. Google has been there past couple of years. They weren't there. NVIDIA, Jensen did the keynote, and then, they really didn't have a big presence in terms of booths. Usually they had like 2 or 3 in different areas because it's, automotive, it could be in gaming. Yeah. And just AI and stuff like that. And it wasn't that big for them. There were 4,000 companies there. Again, about 3,000 didn't need to be there. They were selling like accessories. It's become a little bit of you weren't allowed to sell things there. Now when you go in certain areas, because it's separated by country sometimes, and you go into areas of China, Korea, even France, like they're just trying to sell you stuff all the time. Oh, you can buy this now, discount. And it was never really like that. But when I look at the big companies like Microsoft, Apple, Google, Amazon, they weren't there. Amazon was there for automotive perspective, but not AI. Tesla wasn't there, although you got to get to Tesla for the Hyperloop. Have you ever seen that? Do you see the Hyperloop?
Is that the tunnels?
The underground tunnel.
No,
yeah.
I mean I've seen a few things online, but I've not.
I mean, they're opening up a lot now because now you can go from like it's so big in the conference center, Las Vegas Convention Center, where you have the Central Hall, you have the North Hall and the South Hall, which is all kind of like you can walk back and forth to, but you have the West Hall and you take the Hyperloop there. So it's a bunch of Tesla cars, you go down there and it takes you through this big tunnel. Huh. And it's awesome. It's for free, you go there. But now they have a tunnel that goes to the Resorts Hotel. And they said they're building others to go to different hotels. And the thing is, it's just a tunnel where if you get stuck, you could barely have people like go on the side of you and move. Oh, wow. So if you're claustrophobic, you're going to feel it.
Did you ride in it?
Yeah, I rode in it. Yeah, they've had it there for a while, for years. Cool. But I didn't know they were expanding it, so they're building all underground. That's cool. Now it goes to Resorts Hotel. Imagine being the Resorts Hotel because the transportation there always sucks. That's why I always stay at the Flamingo, which is ranked, I think, as the very worst hotel, and I would not be staying there. I had no hot water for a day. How do you not have hot water for a day? But the logistics are always great because I could just get on the tram and it's literally I'm back from the CES in 10 minutes, opposed to 2 hours sometimes with these buses because everyone's leaving at the same time. It's crazy. You can't really get Ubers because you get thousands of people waiting for them. So transportation factors in. All I need is a floor, but maybe I'll need a little bit more than a floor because the Flamingo's really letting itself go. So that was pretty shitty. But overall, again, B-. The robots. I don't know if you saw my Twitter account at Frank Curzio. I was talking to a robot. It asked questions. It was really cool. I was testing out some exercise things and dancing, looked like an idiot a little bit. The exercise equipment's amazing. Some of the stuff that's coming up with them, just with without weights, they have these bars, and they always had like the bands, right? They always had that, but this is like this went from like 10 pounds for each band to like 70, 80 pounds. I was trying to bench it. I couldn't bench it at full max. And I had one arm up, but I couldn't do the other one. I was like, what the fuck? But, you know, which is amazing, right? Because, you know, if you're working out, you got these weights all over the place. This is really cool. There was a smart scale that was amazing. Measures waves of water in your body, determine like almost everything, BMI, but just different calculations in terms of healthiness of your heart and stuff like that, and with a 98% accuracy.
Okay.
It was really cool when you jumped on the scale. It gave me all these metrics and everything. And my body fat, I think, when I was at the best I was is 19%. And I think I was 24% now. So, you know, I'm losing weight, but I got to start gaining muscles because I'm also losing muscle. But this was a pretty cool scale that you get on. It was like $22,000. It's obviously like, you know, they're selling it's brand new. It's like the TVs, a new generation of TVs. So the new generation, you're not going to buy it for your house, right?
Did you not have the heart to tell them that that's obsolete because everybody's just going to take a shot and a pill and lose weight? So who cares about the...
Well, I
you don't need nice scales when you're going to look thin and fit and be wonderful from these magic pills and shots, Frank. I'm just telling you, save your money. No need to spend $22,000.
I don't think anyone's paying that for you know, but it's almost like a TV. The TVs like you have in your house right now were like $30,000, like 4 years ago, right? And the new generation of TVs from LG were insane. Like it's an OLED transparency T, so LED T. And you could see through them. I mean, you got to see the pictures I have are amazing, and that didn't even do it justice. Panasonic's getting into TVs again. Like TVs are a really big deal, which is kind of like a commoditized product, I thought. But Samsung, did you see the Samsung Stretch TV? It's like a 3D. The TV stretches like a.
I saw the video on X you put up. Yeah,
it stretches. It actually stretches. I thought that was pretty cool. Yeah, it's like a 3D effect. What else did I see? I mean, that scale was really cool. And again, it's just early technology. But like you said, with the pills and everything, I lost weight, but I wanted to, you want to see what your muscle mass is too, because that's one of the biggest effects, the negatives, right? And one of the side effects is you lose a lot of muscle on these things as you're losing weight. And they say you got to work out because you're losing muscle and when you have some of these things. So, I think people will be concerned about their muscle and see how they can measure their BMI. And there's different ways you can measure it, and it gave a lot more information. It was really cool. They gave me a whole data sheet and everything. It was really cool. I was surprised, Netflix was there last year pumping up one of their movies, and they weren't there this year. So you were missing a lot of the big companies. Intel wasn't there. GoPro wasn't there. iRobot wasn't there, although you had at least 10 companies with the same product, a lot cheaper. Remember I was telling you to avoid GoPro, going there for like 12 years. I was just like, I'm seeing the same technology and they're charging 25% of the price out of China. Same thing with the iRobots. But now with the iRobot, it was really cool. I had this hand that comes out that actually, if you have socks or whatever, and it takes a sock and it'll put it in a basket, wherever the basket is, and then, then vacuum or clean the floor. And I was like, what happens if you got like a cat in the floor, but it said it knows if it's a cat or how heavy it is or whatever.
Oh, don't worry. It peacefully kills the cat. Continues cleaning.
It chokes the cat. And but the technology was amazing because even as it was going up, it didn't have like, large steps, but they had like step up, like probably about 3 inches. And that thing that goes on the floor, those Roombas were able to, hop up and go up to next levels and then come down on their own. And then go to like their docking station. So that was really cool. Food tech was awesome. They had like ice cream and sherbet machines where you never have to clean them. So it's almost like the K-cups, right? For the Keurigs. So you get these cups and they have 13 different flavors and you put in there and makes you ice cream and everything. I thought that was cool, though, it's very expensive for those machines. I tried to sample it, but that shit was gone immediately. They're like, yeah, we got another shipment coming in like in an hour. Why don't you come back? I was like, yeah, probably gone in 5 minutes.
Yeah, exactly.
And also they have food, like, I hate when companies say patent pending because it means you don't have a patent, right? But they had one, and I know someone who's a chef who's a good friend, who's also a copywriter, was telling me about like beef Wellington, how he cooks it. You got to cook it at different temperatures, right? And he cooks it at different temperatures, which is, he'll take it out when it's cooked and he blasts it and he cooks. And he was telling me I know nothing about food. So if I sound like an idiot, when it comes to chef and cooking. So when he takes it out for a little while and it still cooks. It's still hot. So he lets it cook. And it doesn't look like it's going to cook, but it's cooking, right? So internally it's still cooking. I don't know if they put like tin foil over it, but they have a machine that was able to cook. It's like this oven type grill thing that's able to cook chicken at different temperatures. And that's important even when you're cooking a turkey because, you don't
want it dry as hell, Frank.
Yeah, and if you cook it at the temperature they tell you, it's either the white meat's going to suck, you got the legs are going to suck, the thighs are going to suck. So you're supposed to be cooking them at different temperatures where the dark meat should be falling off the bone. It won't. So I thought that was really cool in terms of technology, where it's going, how you can cook different things at different temperatures and stuff. And what else? One of the most fascinating things for me, it's not something you can make money off of, was a lot of health related stuff, where for handicapped people. And if you're able to move a wheelchair, what they have is this whole bottom part of the system that attaches to you. It's like a whole robot. And you have the vest on or whatever, and you can control it, and it stands up and allows you to walk. It's very slow, but allows you to go different areas of the house. It was amazing. And they have wheelchairs that you can go where they have sensors now that they're not going to run into anything. You can push it into a wall, won't go into a wall. So it's, I guess it can map out through AI and stuff like that if you're going through streets. But they had a lot of cool stuff when it came to, on the health front. And one of the best things I saw for the first time ever, and now I'll start talking about the CES, was the glasses. Yeah. Every time I go to fucking see these glasses, every year. And I went back, I just looked at pictures from 2017 because, in 2016 and going back just to see some of the things they had glasses then, right? It's supposed to be these amazing glasses you put on. They're supposed to look just like regular glasses. Meta has a deal with Ray-Ban, and EssilorLuxottica is a publicly traded company. It's not in the U.S. and they don't have an ADR, so you can't trade in the U.S. But you can probably buy it at international brokers. That's a company I think is going to be fascinating because they have the partnership. They own Ray-Ban, and they're getting paid by Microsoft all the time because that's where they're building out these glasses. And when I tried on the glasses, they were really amazing. They finally worked. It's the first time they worked. Ray-Ban was there the last couple of years. They never worked. They're not working right now. You got to come back. So they have a little camera here, and you press it on the corner of your glasses, and it could take 15, 30 second, a minute, or 3-minute videos. And I took a video, and then it automatically downloads to the app. And Meta has it where it's like Siri, where you talk to the glasses. So if you're walking up to me, I'm like, okay, Daniel Creech's walking up to me, give me the scoop on him. And Daniel has the biggest Wikipedia page of how he's a billionaire and how he's great and everything and good looking. And it'll say everything. And I go, hey, Daniel, what's going on?
2 planes.
How's
your Gulfstream?
You're a big Ohio State fan. Ohio State is favored by, what, 8?
Yeah, I moved from 9.5 to 8. Damn Catholics.
I got to ask you, before I go to the last part of the CES, are you happy or upset when it comes to Ryan Day? Because to me, it seems like a joke, but I am not a big fan. I am a Penn State fan, and I take it to my grave, and I tell everyone that I'll live with the fact that we have the worst coach when it comes to big games. He's 1-16. He'll never win a big game in his life. I think he won 1, and that was like 10 years ago. He's terrible, right? Franklin's horrible when it comes to big games. He loses every big game, although this game wasn't his fault. His quarterback played like he was a 3rd grader. They should have won that game against Notre Dame. It's terrible. But I know your game is Michigan, but would you rather lose to Michigan and win the national title or beat Michigan and lose a national title? Because it seems like you guys are more focused on, from what I talk to with Ohio State fans, they'd rather beat Michigan and lose a national title. And I think that's insane.
Overall, and it is insane. It doesn't have to make sense. So, passion in sports and all that kind of stuff. It doesn't have to make sense. That is the ultimate game because you're not going to, realistically, and I'm not trying to badmouth a great program who I'm a big fan of, but realistically, you can build dynasties and such like that, but you're not going to play every single year for the national title. You might have a chance, but every single year you're going to play your biggest rivalry. That's why it gets up there and it's so normal and it's consistent. That's the big deal. I will say, obviously, if the guy wins a national championship, you got to give your hat to him and credit him there. However, if he doesn't, after his record with that other team that you've already mentioned more than once, he's got to be gone. And
so if he loses this game, he ought
to be fired before the
Holy shit,
he ought to be fired before the confetti hits the ground.
I hope they fire him. I hope Penn State hires him.
That'd be great.
That would be great. Wow, that's incredible. It's just a mentality of, listen, I think this year's bad.
I know we're having fun with this, but you don't go into a role. This is not government. You don't go in there without accountability and
your
results.
Job is, yes.
When you say, this is our job, these are our tactics, if you don't get those done, you get fired. Now, I'm not saying if he doesn't win the national title, he's going to get fired. He won't. That's Daniel Creech saying what I would do if I ran him. But obviously, if he wins this, he's got to beat Michigan. I mean, you got to do that, man.
And listen, Harbaugh was on the same that same train.
Not an option.
Before he was on, I thought he was gonna get fired. I thought he did a terrible job in big games as well. And then he beat Ohio State, I think. But
and then he won a national title.
And now he's like a god, right?
Well, because he's a cheating bastard, and then he did what everybody else does, and he hopped, skipped, and jumped, and screwed all over the kids. But that's okay.
He's
Everybody
gonna
does
be
it. I don't
a
mind
cheating
about that.
bastard, and you're gonna hate him for life because he did beat your team. Was it 4 years in a row?
Like
3 years in a row. But this year. and we'll get off this topic. This year, Ohio State was supposed to blow out Michigan. Michigan did not have a good team this year.
That was awful.
And it was at Ohio State. So, awful. That I think. But
let's move on, Frank. We've already talked about
that. Listen, you got plenty to look forward to. They should. I have Ohio State winning by like 3 touchdowns. I mean, Notre Dame couldn't even beat Penn State, and their quarterback was horrible. And they barely won that game. But I just see Ohio State's just such a better team. So it'll be interesting to see what happens. But anyway, last point here. When it comes to EssilorLuxottica, they own a company called Nuance Audio. And this is a fascinating product that I tried. And these were glasses that it was like hearing aid, right? So they have like little speakers right here where people don't like wearing hearing aids. And I get it. I'm going to be there probably soon, with these big things sticking out of your ears. And by the way, they have amazing technology there for hearing aids. Every year it gets dramatically better. So please look at the latest technologies and hearing aids. I know a lot of them suck out there, but the ones that are coming out, they just get better. That's one of the technologies at CES. They get better and better. You always have like 6, 7 companies talking about it. And it's good that you have this many companies because usually it results in these things getting cheaper and cheaper because there's so much competition. But with these glasses, you put them on to the regular glasses. You can get them prescribed. You can go anyway, so you have your regular glasses. They look like regular glasses. And when you look at that person, it amplifies a signal. I didn't know this when it comes to hearing. I just thought you could hear, you can't hear, or whatever. But there's different levels, there's different pitches, there's different bass, and sometimes you're not picking up. And you have an app where you could fix it to what you're not hearing as well. And when you're looking at them, it's a little robotic, but it amplified it. And he said, "Go over here, look." So when I was looking at him, I mean, it was really freaking cool because I could hear it, and I know that must be incredibly uncomfortable. Dealing with my father-in-law too. It's really, really bad. He doesn't like talking on the phone anymore, and he's trying to get better. It's just it's a serious problem as you get older. These things were really, really cool. The glasses were nice. They have different colors and everything, and they're going to get FDA approval for this probably within the next month or two. They said they've been going through this process. FDA's been asking more information, and they said they're almost there. That's a publicly traded stock, EssilorLuxottica. I couldn't find a listing in the U.S. I don't think it's not an ADR. It doesn't trade here, but you may be able to buy it on international brokers or something like that. So overall, B-. It's not as fun as it used to be. There used to be robots everywhere, things going on, drones everywhere. It's kind of like dialed down a little bit. And I thought you were going to see a lot more AI, but we saw AI with, LG TVs. LG had a brilliant display. Their new TVs are incredible. Again, the one that I have online, which is the transparent one, is $70,000. No one's going to pay for that, but it was unbelievable. So you could see right through it. Then it has a big black screen that comes behind it, and it's just beautiful. You can put it anywhere you want in your house. But the technology was really cool. I saw lots of innovations, lots of cool stuff. But it was just used to be a lot more fun, a lot more things to do there. A lot more cars. It wasn't as many cars. Usually you see like these models from Mercedes and everything. It was really cool. You didn't see too many of those. That used to be a big venue for them. And they used to do before the Detroit Auto Show because, you have 140,000 people going to this thing. And everyone was like so crazy about the cars. And I think they pushed the Detroit Auto Show back and said, okay, that was like the big event for the cars. Right?
Oh, wow.
Yeah. So instead of Detroit Auto Show, but John D had a great presence. Who's the boat company that's awesome? That's always there. Holy shit.
Brunswick.
Their display, they bring in, like John Deere brings in the actual, like the biggest tractors. And I walked up them and stuff like that. You can see pictures of them. They bring in like their biggest boats. And then they had a sample where it's a big screen and you're like on a boat and you're driving it. And it's almost like simulated, but it's like the real boat is there, except it's simulated.
That's cool.
And then, you're hitting the throttle and everything, you're going. And it had like 5 different areas. And holy shit, I was blown away by this. I just saw one area and it went to like, okay, if you're hanging out and people are on the beach and you just want to, park your boat, you don't have to anchor it. So, and plus it has sensors all around it. And they're assuming like, okay, if you're wearing sensors or whatever, people, so it detects that people around, if people are too close, it'll automatically back up the boat or whatever. It'll know exactly where you are the whole time.
So it essentially just floats out there.
It just floats out there, maintains, it almost drives itself. And then the AI capabilities around it were just amazing of how, like, you'd see the people around it and just, it made it like so easy. I was like, wow, this is incredible. And there's like 3 other places you can go. And I just, it was crowded and go there. But I was like, at least it was fun. You were looking at stuff like, wow, I've been in that environment before. Like, if you're going away and you go to an area where everyone's like in shallow water, where you could see fish and stuff like that and just hanging out. You always got to be careful, but it was really cool. The technologies that Brunswick has been there for probably 7-8 years now. And that's a company that's just been on the forefront of new technology, evolution, innovation and stuff. And that's been pretty cool. But overall, B-.
Sorry, go ahead.
No, B-. And it was pretty cool. It was a good show. It's definitely worth going. Much better than last year. But without the big companies there with AI and them talking specifically, you know, again, everything's really hidden in what they're doing within AI. But I could tell you this, Daniel. I didn't want to go there yet. I was going to go there later. One thing, we're going to talk about CPI. CPI is big. The market surge and say we're going to get to all this shit. There's so much to talk about because we got earnings, bank earnings. So these headlines fell under the radar. Microsoft, Meta, and Amazon all announced that they're going to be cutting employees in 2025, probably early 2025. Okay, they made these announcements over the past couple of days. And the way they made these announcements was we're going to get rid of like the underperforming employees. This is no coincidence. This is AI at its core. You don't see companies, and this is what you've been seeing with these big companies. Their stocks have been ramping higher. Yes, they pulled back a little bit off their highs. They're still up tremendously over the past couple of years. I think it's a buying opportunity for many of these names. They're using AI and AI bots, and what I heard from NVIDIA and Jensen Huang when I think it was 30 million software engineers. He said they better be using these AI bots. If they're not, or AI agents, if they're not, then your job's going to be obsolete.
Yeah.
And you're seeing it now. You have to pay attention because you want to learn this technology and you want to embrace it. Because when you embrace it, like we have an editor here, her name is Emily, and she's using AI for so much stuff and she's embracing it. And people are like, AI is going to take your job. Instead, she's using all these AI programs. She's getting things written for us right away, all through AI programs, taking our content and exploring this stuff. We're also exploring avatars now. And then you're going to see us talking where, I just have to put in a script and it's going to be me talking, right? This is what we're doing at AI. Embrace it because these companies are laying off employees where the stocks are all-time highs or near them when you don't see that. And it's because of AI. And it's going to be taking a lot of jobs. We're almost there. We're really almost there. I think 2025, especially second half, you're going to see it and embrace it. There's so much you could learn from these technologies. You can make a fortune off them if you really know this industry. I can't even hire specialists in AI because it's going to cost me $300,000, $400,000, $500,000 a year. I mean, these guys are such high demand, and it's still so early in this trend. Start learning it because Microsoft spent $80 billion on AI alone. Amazon said they're going to spend $100 billion on AI by next year. Just those two companies. I mean, we're talking about numbers that are insane, and these guys are generating cash flow. That's where the money's going. There's no coincidence that these guys are laying off employees, and they're seeing the benefits of AI. And it's under the radar. If it's not a big story today, it's not a headline story because there's so much going on, which we'll get to in a minute. But that's something that caught my attention. I just want to mention up front, which is pretty crazy.
That's cool. I knew you were going to want to talk about that. I thought the 5% from Meta was interesting.
Yeah.
I have two quick things to talk about, Frank, before we can move on. Number one is I got to give you some kudos because actually Brunswick stole the show for you a couple years ago. We recommended that in CRA. The only reason we took a small loss, about 10%, the only reason we sold out of that was because you recommended that January or early February.
We came back from CES right before.
That was the 2020, COVID. And we got stopped out. We ended up selling that out because of COVID. Looking at a weekly chart, that's near the bottom range. Check out Brunswick if you're into that space. Two other ones, the GoPro and iRobot have absolutely fallen off a Florida cliff. Yeah. It's been pain and agony. If you just avoided those because Frank's boots on the ground's research, good deal. You saved from losing 80-some%. Those have been an actual just terribleness. And then finally, Frank, before we move on, the most important thing, did you bet on 34 Red like I asked you to?
I didn't.
See,
bet
people.
But I didn't tell you.
Do I get no risk. I'm like Rodney.
You know what? I'm an idiot. I totally.
We were on record. It's on tape.
I know. When the time I got to CES, it was such a mess. I was such a hot mess. It was just a million things going on, and plus I was a little sick. I was just my stomach.
Boss, I don't need excuses.
Every excuse I'm going to throw at
you. It's okay.
But I will say this. I found one day to gamble.
All right. At least it's picking
And I said,
up.
I'm taking $1,000 and I don't care if I lose it, right? And I went into like the high-end slots and then I said, okay, let me take out 300 and put it on roulette and just bet, a couple of numbers. And I lost that straight. And
That's even worse. You played roulette and forgot to play the damn number.
I totally forgot. That's on me. That's totally on. I think 34 came out like 6 times in a row too, so if I remember correctly. I was like, 34, who the hell plays that number?
I wish Dan wouldn't told me to bet 23. 34 keeps coming up every time.
Yeah, I was like, because I didn't hit. I think 34 actually did come out. I'm not kidding.
That's awesome.
But I hit a jackpot. I hit for $3,000.
Wow.
Yeah.
So you walked away a winner.
Yeah, I walked away a winner. I walked away about 2,300. So yeah, I hit that and I was done, but it was cool. Like out of nowhere. I was like, holy shit. It was cool. So on the slots. So it was a $10 slot that I played. I said, okay, I'm going to play a little bit.
Was it a Wheel of Fortune slot?
No, it wasn't a Wheel of Fortune slot. It was like the one where the coyote comes out and blows like the houses down and stuff like that. And they were like
3 Little Pigs.
No, it wasn't that. It was Puff and whatever something.
I just like that. You're like, this coyote
I know,
comes out.
But I like the high-end slots because they give you beers right away. It's hard to get a beer. You get the free beers. All in Vegas is free beers. The Indian casinos, they kill you.
But you're right. The service is very slow.
But they had, and they had like these big chocolate chip cookies, and they have like M&Ms and stuff. I was like, what's going on? And then I wanted to get a cigar because I won. I'm like, all right, I need a cigar. They're like, come to this room. It's like you press it, goes. When his door comes out, and it's this whole cigar lounge.
Oh, nice,
beautiful, and the cigars are like $100 or more. I'm like, no, I need, I'm not like super.
No,
cigar.
I need the
That's
good stuff.
No. Yeah, I was like, I need $1,000.
I just hit a jackpot. I just need a good.
I like cigars. I like acid cigars. I like a little flavor to them. You're more the.
That's awesome.
Yeah, but and then I was looking at they had like champagne bottles there for like $14,000. I think it was in a Palazzo. I was like, yeah, this is.
Oh, that's a little high end. Yeah.
I was like, no. I was like, I just want like a $10 cigar. And anyway, but it was pretty cool. Oh. But overall, I did not bet 34. And I don't know if you had anything else. What else were you going to ask me?
No, that's why I let in with giving you props on the stocks, because I figured you let me down on the roulette wheel.
Killing me. I totally forgot.
I love the fact that you admitted you actually played roulette and didn't even think.
I played roulette really quick.
Yeah, I was just talking to Daniel about it.
I think it was like, and plus the time changed too, and I got there late because it was delays and stuff like that.
Excuses.
I'm trying to think of more excuses. I can't think of any more right now, but I don't know. It's just great. But all right, let's get to what's driving the market. Markets are screaming higher today. At least they were. Who knows if they finished down? They were up like, it's like risk on, right? We said CPI came out. It came in at 3.2%, which is better than 3.3% expectations. And you know what? That might seem like nothing to you, but this is why when Daniel and I, we go over this stuff with you guys, we tell you that, the expectations matter, or the sentiment going into a quarter matter. Hey, so you're looking at the banks going in, and everyone. If you're on Twitter, it's X platform or whatever, it seems like everyone thinks the bank's going to blow up. You're dead. You're in trouble. All this debt. All this off balance sheet. The liabilities and the options and the bonds are underwater. So they got to be held to maturity or whatever. All this shit's everyone's telling you the bank's going to blow up and shit. The banks came out and they blew out the numbers across the board, which makes all the sense in the world. I'll tell you why in a minute. But the CPI, what do we have? What's been driving this market? The market's been pushing lower because rates have been going higher, and they're like, this is the first time in history the Fed's cutting, and we're going up so much. Holy shit, this could not end good. And they're comparing to different things. So we're being driven, if you look at this chart, if you don't believe it, we're being driven by the 10-year. Okay, if you look at the 10-year, it's just over the past month, and I got a chart here, I'll show you if you're watching this on YouTube, and just over the past month, if you look at it where interest rates have gone, the 10-year has been shooting higher, right? Even though the Fed just lower rates. And then we're seeing inflation numbers come in a little bit stronger expected. The job number came in much better than expected. So it looks like we're going to get this inflationary environment's going to go higher. Rates are going to go higher. And when rates go higher, as that 10-year approaches 5%, there's data showing like only like 5 to 7% of the time, like the equity markets do good where like, near 5% or above 5%. So we have this trend going higher. We have a market, and I really wanted to buy the markets today. I just didn't get a chance to, because I thought this number, even if it was in line, it was going to, the market's going to spike because sentiment was so oversold. I mean, if you look at it technical indicators, we are incredibly oversold. Expectations of rates will go higher. This just came in a little bit better. So what happens is you see this reversal. If you're looking at this chart here, you're seeing over the past month, rates have gone higher and stocks have gone lower. So you're looking at rates popping 6.5%. And while the market was down over here, I think actually we went up. This is like 2 days ago before everything. So we have the 10-year up almost 10% over the past month, and then we have stocks down, 3-4%. And now you see that reversing, and now you see these lines getting together, right? So it's like an inverse relation. Now you're seeing them get closer together because interest rates are coming down, and now stocks are rallying. So when this happens, it's a risk-on market. So it's no surprise that you're seeing, if you look on CNBC or wherever you find your quotes or whatever, the market's kicking ass, but they are starting to sell off. They're up like 2.3%, the Russell and NASDAQ, and now they're up like 1.7, 1.6 each. The Dow is up 700, it's up 544, but you're seeing the Russell surge. You're seeing a lot of risk on, like quantum stocks go through the roof after they sold off tremendously. The back and forth with Jetson comments and shit.
Normal day is 30% plus or minus.
I know, you think cryptos are volatile. Those quantum stocks, holy shit. It's crazy. And then you have, and then of course you have Bitcoin, right? Bitcoin's on fire and almost back to 100,000 now. And look, Bitcoin, the dynamics are there. I've been doing a lot of research on this, especially since Trump won. I think people do not understand the dynamics of Bitcoin and how much higher it's going to go from here. And just like we said, and we predicted this, you can go back to 2017, 18, 19, 20, 21 as we would talk about Bitcoin, but especially we did a live event recently, Dale and I, and these are free events, and we do a Q&A afterwards, and we did a couple crypto events, and we're telling you, like, listen, you have to invest in underlying cryptos, the next 100, 150 that we researched because these are really good names. And because Bitcoin was going over 100,000. We said that when it was at, 50, 60, 70, 80, all the way up. And I said, I don't know, it could be a year or two, whatever. It happened a little bit sooner than I thought, but we're probably going to hit 150 this year. I think it's going to be one of the best performing sectors, but you're not going to be a millionaire by buying Bitcoin here. You could if you hold it for like 5 years, that's different. But, a lot of the money's been made in Bitcoin. I know a lot of people that made money in Bitcoin. I've made money in Bitcoin. Even Ethereum, has been up and down and stuff like that. But I'm talking about like the next 100 cryptos because of the new administration that's coming in that's going to be crypto friendly. God, it's going to disrupt the banking industry incredible. I'm going to go over why that's such a big deal with some of these numbers in the banks in a little while. But we are going to have another free event, and this is a crypto event. It's going to be on Thursday, January 23rd at 7 p.m. Anyone can attend. It's free. You just got to put your email in there. At the end, we'll have a special offer for our crypto newsletter. If you want, we're going to give away a couple free picks. Is usually how we do it. And almost everyone in our crypto newsletters come in through this event. And we try to do it with the best timing. And right now, a lot of these names sold off over the past month, probably up higher today. But I believe you're going to see 3x, 5x, 7x gains on a lot of these. And it sounds crazy, but all these, we've had 20x, 30x, even 40x winners that we've seen during these bull markets. This is very common in this industry. If you look at the top 200 cryptos, almost all of them have had this type of run that you've seen 10x plus on them. And you don't really see that in the markets because they IPO at these crazy valuations. They do so through SPACs and reverse mergers and shit like that. So, a lot of the growth's already taken place because the valuation is in the billions when it IPOs for the first time that average investors, mom and pop investors, could buy it. So the event's called Becoming a Crypto Millionaire in 2025, which I honestly really believe that could happen because you're going to see some of these things really take off because there's a framework. The technologies are incredibly disruptive, but nobody wanted to put money into them, especially institutions, because you had Gensler there, who just did an interview.
Gary.
Right? An exit interview, whatever. He's on CNBC, and this guy's an asshole, right? He's been against the crypto. He's been doing everything he can to shut down his fucking industry politically. And now that's gone. And the technologies that these companies offer in terms of, you don't have to pay fees. It's faster transactions. It's safer because it's on the blockchain. And you say, well, sometimes it gets hacked. It gets hacked if you lose your keys. It gets hacked if you on bridges and stuff like that. It doesn't get hacked on the blockchain. Now, no longer you need bridges with new technologies like Chainlink and stuff like that. Names that are in our portfolio that are up, I think, probably like 200%. There's a lot of underlying technology that you're going to see. You're starting to see it now. We just recommended a new company in that newsletter, a new crypto, where it's gotten funded by Bain Capital. They raised $100 million in September. And it's brand new technology that I think is going to be a game changer. And you're going to see a lot of money come into this industry to fund a lot of these companies. It's going to be really, really cool. And it gives investors a chance. It's risky. It's speculative money. But the risk reward, you'll never find a better risk reward in any industry than crypto. And I've made a ton of money in crypto because of this. And, I've seen things come down, but I've done it the right way. Don't put your whole portfolio in it. But in this event, I'm going to break down a couple of events that you're going to see Bitcoin surge to 200,000. No problem, I think. It could happen in 18 months and 2 years, maybe sooner. Even if it happens 3 years. And as Bitcoin goes higher, you're going to see more adoption for all the underlying cryptos, all the underlying technologies. These are basically software companies. And you're going to see a ton of money flow into these. It's not going to be billions. It could be trillions. I mean, you're looking at a market where BlackRock's like 2% should be going into this market. Everyone should have 2% of their portfolio in it. I mean, they have $11.5 trillion in assets. Okay, you're talking about if you took out like the whole 100 trillion, it's 100 trillion assets. That's what the market's supposed to be in terms of wealth. Assets under management for wealth advisors is going to be 100 billion in the next 5 years. I mean, if you look at 2%, it's 2 trillion. Okay, so at 2%, they're saying that should be a Bitcoin allocation. Bitcoin's allocation right now, I think the total market cap is like 1.8 billion, 1.8 trillion. So you're looking at double the amount coming into this market if you had a 2% allocation, which isn't that big. Even if it's a 1%, you could see that's just one small reason on the macro side that you're going to see Bitcoin continue to go higher and higher and higher. And it's going to result in a lot of these underlying technologies doing great. And I got to tell you, we're having this event, new administration. We're going to share 2 ideas with you, Q&A, which is really cool. And it's really live. So Daniel answering questions. We have fun. Again, I tell everyone the set can fall on me and you guys can make fun of me. It's really live. A lot of these people, almost everyone in the industry says it's a live event. It's taped. We're not taped. We're live. And I like doing it live. I like having fun and free to ask any question you want. We'll give you the link. I'll send it out to the podcast people as early as possible because we're marketing this even outside of our list. I think we're going to get a lot of people attending it because Bitcoin is going to have a fantastic, fantastic year in 2025 just from the new regulations coming. And it's going to result in billions, tens of billions of dollars flowing into this industry. And a lot of that's going to go to the top 100, top 200 cryptos. And those are the ones that are in our newsletter right now, Crypto Intelligence. So if you want to attend that event, it's for free, January 23rd, 7 p.m. You'll get an email from us because a lot of you already are on our list. But it's going to be really cool. Again, it's absolutely free. So definitely, mark your calendar. The 23rd, 7 p.m. next Thursday. So
that's right. Be there.
Be there. Be there. So where do you want to go, Daniel? So, you know what I love about this? We have so much to freaking talk about. Like sometimes it's like, okay, well, what do you want to talk about? Like when you have earnings season, all this shit going on, CPI, the PPI was recent, right? That came in better than expected too, right?
Yeah. Yeah. The inflation data, I just quickly here on this, I'm not trying to rain on this parade. And like you said, the markets have gone bonkers, which is great to see. And I want everybody to make money. However, inflation is nowhere near the Fed target. Okay. It's still going up by, let me see, all items rose 2.9% in December, and that was after rising 2.7%. Now, this is not stripping out food and energy like they'd like to do at the core. I'm just talking broadly here. So inflation went from 2.7 in November to 2.9 in December. That's increasing. Now, 1 month, let's not get crazy. I'm simply saying it's good to see the relief, as Frank talked about. Sentiment was one-sided. This is a relief rally. We'll see if it holds. But don't take this data and think, hey, we're back to 6 months ago, and the Fed's going to be there and easing and all that. I think they do come in eventually, but it's just hard to believe that there's not a lot of unnervingness and a lot of pain. Just expect this choppiness. And I got to give kudos to the best bankster on Wall Street, Jamie Dimon. He was on the conference call today. I only heard tidbits and looked at bullet points. I haven't listened to it yet, but I give him credit because he's been consistent, Frank. Jamie Dimon has been like, hey, I'm worried about stagflation. I think inflation is going to linger around and continue to be higher or linger around, and we're going to have a little slowing pace.
Yep.
He's done a very good job. He's done the best job, in my opinion, at setting up Wall Street. I mean, I can't remember the last time. It's been at least a year, and I could be wrong. I'm just going off memory here, but it's been at least a year, 4 quarters, where all I can remember from Jamie Dimon is him saying, hey, net interest income is going to keep going down. Brace yourselves. We're going to take a big hit. Interest, we're not going to keep doing all this. Florida stock's at an all-time high, I believe. He set the expectations correctly. He's the best bankster, no doubt. They have the wind at their backs with the way they pay out nothing and charge higher rates. But his points that he's been consistent on is, hey, I expect inflation to kind of stick around, do what it's doing. And that's exactly right. So while I'm excited and I want to see green and people making money, don't think that we're back to, we're not back to the euphoria of, hey, Trump got elected, now everything's okay. I know a lot of people are thinking that in terms of just business friendly. It's not going to be smooth sailing. So I don't want to rain on the parade, but I do want to make sure everybody's grounded. And you shouldn't be just constantly buying hand over fist right here on this nice uptick, Frank.
Okay. I'm going to take I'm going to take a different take on this, okay? And I'm going to be real with you. I think that's why a lot of people listen to this podcast. It's not marketable when you're real because people love conspiracy theories. The market's going to fucking crash. The banks are done. They're done. They're going to run out of money. The dollar's going to lose its reserve currency status again since the 70s. I've been hearing that story. Well, I've been hearing that. I didn't really pay attention because I was born in 1972. But the 80s and 90s, you hear it all the time, right? It's going to happen. It's going to happen. It's going to happen. Let me tell you something about the banks, okay? Jamie Dimon has done a great job setting expectations. Telling you that, hey, things aren't that good. The economy's not that good. This is not that good. This is not that good. And they just reported the greatest numbers that they've ever reported in the history of the fucking company, nice. Right? So, and if you want to know how big JP Morgan is, because you have the 4 banks that are monsters, right? But JP Morgan is in a class by itself. If you're looking at revenue, Wells Fargo, Citi also reported. Citi reported around $20 billion in sales. Wells reported $21 billion in sales. You know what sales were for JP Morgan? For the quarter, $43 billion. Okay, they're double the size of the next competitor. All right, think about that in terms of sales. I mean, it's like Microsoft's at $6 billion and Apple's at $3 billion. right?
Yeah.
3 trillion, in terms of market cap. It's so if you look at these 3 banks, Bank of America reports tomorrow. If you take the 3 banks that reported, JP Morgan, 43 billion, Wells, 20 billion, 21 billion, Citigroup, 20 billion, and Bank of America reports tomorrow, expectations of 25 billion in revenue. That's 108 billion in revenue for the 4 largest banks for the quarter. For the fucking quarter. Think about that for a minute, okay? And you're like, well, it's going to end. It's going to be horrible. It's the charge-offs, everything. Okay, well, I'm a data guy. I like to look at data, right? And that's where it tells me. That's why we've been in AI for a while. And it was like, hey, it's going to crash for the last 2 years. Yeah, when you're looking at the data, and by the way, for the banks out there, for all you guys that enjoyed this moat from politicians where you're untouchable to the point where New York Community Bank got to over 100 billion in sales and was growing and got punished for it and almost went bankrupt because it got over 100 billion in sales, which raised their capital ratios, which resulted in them having to increase those capital ratios, which comes right off the bottom line. And it shows that they're having losses, right? And the earnings didn't meet, and people get worried and say, holy shit, what's wrong with New York Community Bank? And it's like a run on a bank. As you're selling the stock, and as those people are removing their assets, they have to keep up with those ratios. And when you're over 100 billion, your ratios increase. And they got to 100 billion because they got free assets from the government from, I think it was Silvergate. You get punished in this industry for growing. It's the only industry in the world that you get punished for growing. Those days are over because now you have crypto. And when you're looking at crypto and you're looking at tokenization in the real estate market, I can't tell you how many people have called me. And at a starting funds of tokenization in real estate, why would you do that? Because you have equity in your home. So when you have equity in your home, you could tokenize your home. If you have $1 million home and you have 700,000 equity, all right, you could refinance, but it's going to be at higher rates. Why are banks charging such high rates for great customers? Why are credit cards, these assholes, charging 26% for good customers? Right? I mean, it should be 26%. You could charge 15%. And now they had no competition, banks, Capital One. Now you're going to have the competition in crypto because there's going to be a framework around these companies where you could transfer money back and forth. I wire money all the time. They charge me to wire money. What's JP Morgan's rate? You know what their rate is that they're paying on that savings account? How do they get away with it? I mean, it's like 0.1% maybe. I mean, how are you getting away with that when you can put your money in international brokers and get 4.5% right now? So when you're looking at the banks, why did they do so good? Because over the past year, the Fed was supposed to lower rates. And before that, they were generating so much money off of fees and going crazy because they didn't really generate a lot of net interest income because rates were low. Now, when they're higher, they earn the spread between that. And now Jamie Dimon did a great job, and a lot of these other CEOs from Wells Fargo and Citigroup said the same thing. We expect that number to come down. It's going to come down. It's going to come down. And what happened, rates are staying higher for longer, and now the Fed's probably going to stop raising rates, which means there's this gravy train of profits that they weren't expected that continue to pour into this company. I mean, so much so that sales are growing double digits for these guys. And you're looking at net interest income, and Jamie Dimon was forecasting that this was going to go down for the last 4 quarters, not 4 months, 4 quarters, because everyone thought interest rates was going to go a lot lower. The Fed was supposed to lower, like 6-7 times. They didn't even get close to that. JP Morgan generated $90 billion in net interest income for the quarter. So JP Morgan have the Q4 highlights up here, $23.5 billion in net interest income for the quarter. So let's put this in perspective. So when you're looking at the past 3 quarters and you add up these numbers, it's 50 billion, 48 billion, 47 billion. If you add all those numbers, and this is Q4, so this is for the full year 2024, they generated $170 billion in net interest income. To put that in perspective, in April, Jamie Dimon came out and said that they expect to generate $90 billion in 2024. $90 billion in 2024 because interest rates were supposed to come down. And since interest rates aren't coming down anymore, and they're rising, even though the Fed was cutting, the Fed looks like the Fed's going to hold off on cutting even after the CPI number. I mean, all this money is gravy. And think about the amount of money that is coming in. We're talking about $90 billion to $170 billion. I mean, again, that's just free money to them. That's going to come in probably next year. And they're forecasting next year the same amount that they forecasted in April. They're saying it's going to be around $90 billion next year. I mean, when you look at net interest income for these banks, this is why they're doing so well. This number was supposed to come down dramatically, and it hasn't because interest rates are higher, and these numbers are just mind-blowing. This is the best possible environment that the banks have ever seen in their history. And I'll tell you why. Because we've never seen an economy when interest rates go higher and the markets continue to do well. So GDP is strong. You still have low unemployment. Consumer spending is solid, right? These are the numbers that are coming in. M&A is about to surge. Everyone's excited. Everyone's talking about it. Goldman Sachs reported. They talked about it. They're all happy. CEO sentiment is at the highest it's been in a long time, according to Goldman Sachs, because, especially in the banking industry, because now you're going to relax a lot of these laws. So M&A is going to be back because the Justice Department immediately, you say, hey, I'm going to take over. They're like, nope, you're getting sued. That's our Justice Department. They sue everybody. I mean, and not only that, they're all managing trillions. And what do we see with the markets? Continue to go higher and higher. Yes, they're off a little bit off their highs, but they make a percentage of those assets. So they have all these tailwinds that aren't going away. I call it like the Tom Brady market, because Tom Brady is like the most perfect individual I've ever seen in my life, right? I mean, he's the GOAT. I mean, had the perfect wife, and not there anymore, but still. I mean, immediately he's like, I'm not playing football no more. Just when he announces I'm retiring, and now he's making how much money? Tens of millions of dollars for being an announcer, and he's got to get a little bit better in that job. But still nobody cares because it's Tom Brady, right? So it's like a Tom Brady market. It's absolutely perfect. Wells also reported good numbers, but I will say this. I thought it was funny that Wells Fargo, their analyst came out with a note about Tesla. Did you see that?
No. Is somebody taking a shot at Tesla?
They expect Tesla is going to fall by 70%.
Nice.
Wells Fargo. That's not like a little boutique firm. That's like
the outgoing lawsuit.
No idea. Last thing I'm going to say about banks, okay? Because everyone's worried about banks, and I get it. I understand. It's the greatest thing ever. It's the greatest story, and I know everyone wants to get together. The banks, that's it. They're going to go bankrupt. Oh my God, I got to own gold. I got to own Bitcoin. Holy shit, the world's going to end. Here's a few data points. Bank of America, they report tomorrow, but they came out and said total delinquencies are down. They're down year over year, okay, to 1.46% from 1.51%, which is nothing. Goldman Sachs, credit losses down from 577 million to 397 million year over year. You're looking at the banks and everyone's saying, hey, it's broken. You're going to see delinquencies. All this shit's going. There's a lot going on with the economy, and the lower 1/3 of the economy, Daniel, is really getting crushed. But the lower 1/3 of the economy are not the people that drive the economy. Okay, and I'm talking to you and being real from a stock perspective, not from someone who doesn't give a shit, because I do, right? We want mom and pop investors to make money, but it's a tough environment because they don't own assets. And home prices are still doing very, very well. It came down a little bit, but when you own assets, they appreciate it tremendously, especially since COVID, because the government was pedal to the metal, just inflating every asset class. But what's driving the economy, and even when I'm seeing when I'm traveling, people are spending so much freaking money. And the metrics, again, I'm not coming at you saying, I'm always bullish or always bearish. The facts change, I change. I look at the data. The banks are stronger than they've ever been. They're stronger than they've ever been, okay? Everyone's telling you the banks are dead for freaking 3 years, and we've been really telling you, listen, you got to have a bank in your portfolio, buy a bank, and these banks have done incredibly well, and they're going to continue to do well. I mean, JP Morgan had high expectations, so it's down a little bit. Goldman Sachs is up a lot. I mean, Goldman Sachs, did you see those numbers?
Yeah, those guys blew it out of the park.
They were expecting,
and it's doing well. We needed that because we have that dollar stock club.
$8.21.
Yeah,
they're expecting. They generated almost $12 in earnings, and it was like this quarter that was like it's like not like AMD where AI is through the roof. We're great. We're awesome. And you look at the rest of the 50% of their business, and it's down to 20%, 50%, 60%. I mean, this is record revenue in equities, investment banking fees, fixed income, currency and commodities, which you break out into a division. Optimistic about M&A. Under new administration, expect strong fundraising environment going forward. I mean, for Goldman Sachs, they checked off every single box. You can't look at Goldman Sachs at one number in any one of the divisions and be like, and worry about it. Every one of them blew out the numbers across the board. So, for me, when I saw these bank earnings, it's just like this reassurance, like, okay, they're fine. They see everything coming. We're all talking about how bad it is and interest rates are higher. They're fine. Commercial real estate, they know about commercial real estate. It's the things that you don't know about, which you have to worry about with the banks. And even if you don't know about, which I hate to say this thing, I hate to fucking say this, even what you don't know about, and JP Morgan comes out and says, holy shit, we have leverage to some market that's moral hazard, we're going to get crushed. What do you think the government's going to do? They're going to come out and they're going to bail out these banks like they always fucking do. Okay, so it's putting a floor underneath it. I hate the fact that they're going to do that. But as an investor, you need to understand that owning the banks, there's little downside risk and there's still lots of upside potential. Probably even in the mid-tier banks, I think much more upside potential. I think Citigroup's great. They're still trading around in between 10 and 13, 14 times forward earnings. These are not super expensive stocks. So, that reassurance along with inflation coming down a little bit. And one last point here I want to show them, Daniel, before I give you the stage here, is I pull up this chart for the consumer price index. And if you look, and this is from CNBC, and they have it based on month over month. And if you look and you go back to February 2024, this is in the core. This is regular inflation. It's 0.4%. Now you're wondering why this market is higher on this number, even though we just, came in a little bit better than expected. If you're looking at February, it's 0.4, and you have this downward trend. You have this downward trend that continues just to March, April, and then all the way down. You go into July, it's 0.2. It stays at 0.2 for July 2024, August, September, October, and then November we see this uptick from 0.2 to 0.3. December we're expected to go to 0.4. You see this trend of higher inflation, and now people are worried. That's why the stocks are selling off. And when you get a better than expected number saying, hey, it's not as high as we think, it's 0.3, that's why you're seeing a reversal and you're seeing a bid under stocks right now. So a lot of good news out there. Doesn't mean you just buy the market and close your eyes. A lot of things are expensive and crazy, but I'm still finding lots of ideas out there that just, pedal to the metal, good expense controls, good management teams, sales and earnings are going higher. There's a lot of these names, especially small caps, that I think offer a lot of upside potential here.
The big takeaway for me quickly on Goldman Sachs, just reading through some of the bullet points and earnings highlights, is how they made a point to talk about how a sentiment or change in CEOs that they're talking to has changed since the Trump election in November. I think that's a big deal. And as you said, that spurs IPOs. Next week, there's a new IPO in the energy space, and it is Venture Global. And they are, right off the top of my head, Frank, I believe they're the second or third largest LNG, liquefied natural gas exporter from the U.S. to international markets here in the U.S. I don't know exactly what day. Expect all the big banks. Frank, if you have your calendar tab open on briefing, click on the IPOs, and it'll tell you who the front runners are. Again, memory serves me correct, it's JP, Goldman Sachs, and all that. The takeaway here is, you're right, the Trump administration is not a savior for all markets, Frank. I know we're not saying that, but it is a tremendous boost. And measuring that boost is going to be difficult because you have a whiteboard of opportunity. Frank, if you're making a movie or a series, I think that is tremendous control, because when you can control the narrative, you essentially are always moving forward. And if you think of one of your favorite movies or series, like Star Wars, Frank, I mean, I'm not a Star Wars guru, but it's a good example, because they made what? 4, 5, and 6, and then they went back and made 1, 2, and 3, right? Mm-hmm. Game of Thrones is doing the same. A lot of people are copycatting that. That's one of the best compliments you can give, is to copy somebody like that. And what a great scenario to have and say, hey, you know what? This isn't working out. Well, hell with it. Let's go back and say this happened 10 years ago and make a movie like that. Now it all makes sense. Mm-hmm. How do I tie that in with Trump? Well, because you don't know what you don't know, and you never know what this guy's going to say. And it absolutely cracks me up. But how about an external revenue service, Frank? Do you have that one in your rabbit hat over there? Hell no, you didn't, because nobody's ever thought about creating a external revenue service versus the internal revenue service, because you have this new idea to bring back tariffs and all that kind of stuff. The point is that you have no idea what this guy's going to say next. So trying to put him in a box, and I still think that the media and the financial media is still putting Trump in a box and just calling out what we all know. Oh, prices are higher. What are you going to do about that? Well, we don't know. Again, he's not a magician, but for crying out loud, okay, he wants to drill, baby, drill for energy companies. I just recommended a couple energy companies in the oil space. Do I really think that Trump is going to be able to successfully get oil down to, say, $45 a barrel and keep it there? Maybe, maybe not. Does he want to? Maybe, maybe not. Does he think that that would create a lot of wealth to do that? Or, since this guy's just making up space programs and war space programs and external revenue services, what if, Frank, he says something like, you know what, we're going to give a special tax break to the oil companies. If you can get us up to, we do about 13 million in daily production. If we can get that to 16 million, that's not pulling a rabbit out of a hat, people. That 3 million increment is from recommended, or how do I say that, Frank? Appointee, hopefully, the Secretary of Treasury. Mm-hmm. Scott, is it Bennett or Bensett, whatever?
Yeah.
He wants to get 3 million more barrels of production per day. So let's say we go from that 13 to 16 million barrel per day. That definitely would be bearish for oil. Again, what if he pulls in a rabbit out of the hat and says, yeah, but you don't have to pay taxes on that? Or, you know what? You guys fill up the Strategic Petroleum Reserve and we'll give you a tax break. The options are crazy unlimited. So don't just run for the hills because of the headlines being touted about right now.
Yeah, oil's pushing $8 a barrel right now. So we'll talk about more about that tomorrow and get into oil. There's so much to talk about. I want to talk about the Zuck interview. We can talk about that tomorrow as well. with Joe Rogan. I thought he said a lot of interesting things, and so did you. Especially when it comes to Apple and things like that, and innovation. I think we can get into that tomorrow.
Oh yeah, for sure.
And that's going to be on our Wall Street Club Premium podcast. But you're seeing a lot of moves here. You are, and you have to pay attention. Also, if you want to be entertained, definitely watch some of these hearings because wow, they attack. It's just so funny because they're such hypocrites, right? And these politicians, I mean, they really have no soul. They don't even give a shit, right? It's pretty crazy. It's not about who's the best person for the job or whatever. They're just like, okay, how do we smear this guy as much as we can? And it happens on both sides, right? But the hearings are just this grandstanding, and I don't think the politicians know, but it highlights how much of fucking idiots they are. Because these are really people who are lawyers, right? And what was that thing where you said? I think we talked about with Zuckerberg. Remember, they're like, "How do you generate money off of your?"
Oh yeah, one of his hearings.
And what was it? He's like, "Well,
he said, we sell advertising.
You sell advertising.
We sell advertising to you."
And the guy didn't even understand it. Like you think you'd learn that before you're questioning Zuckerberg. This was a while ago, but they really don't. They just okay. We need to destroy this guy. Anything. Let's destroy whatever, however we can. His credibility. It's not going to matter because they got the votes anyway in the bag with senators in the House and stuff. But it's funny seeing the whole process of it's so political, but I don't think they realize even on both sides when you're doing that and attacking someone and you're just doing it in a way where you really don't care if this guy's going to benefit the country or not, if he's the right person for the job, it really makes you look terrible. And all this stuff gets broadcasted now every play real time. You can watch it on YouTube real time and stuff. And it's just, you really see the politicians and how terrible and how disgusting they are. But I don't know if that's ever going to change. Hopefully it'll change a little bit, but man, it's pretty.
It's not going to. Don't waste your time.
Nah, I don't think it's going to change either. So, we'll get to Zuckerberg. We'll get to things like that tomorrow.
Yes, tomorrow I'd like to talk about the Gary Gensler, Elmer Fudd interview as well.
Gary Gensler as well. Yeah, that should be pretty cool.
And I already ranted about Janet Yellen's exit interview when you were gone, so I won't do that again.
I'm so glad Gensler's
Although,
gone.
I will say, Frank, because you didn't hear it, and I'm not going to go back into it, but we still have, currently, the sitting Treasury Secretary is not sold, is unsure, and doesn't know if money printing and sending it to people causes inflation.
Yeah.
If that doesn't prove you out there, no matter what you're doing and where you're at, that you're smart enough to run this country, then nothing will, and you'll just stay there, and that's fine. But have confidence in yourself, people, because don't give people credit when they do not deserve it.
No. So, and that also goes into the theme what we're going to talk about next Thursday is it doesn't matter who's there. I know this whole Doge initiative and for you guys to think that we're going to cut spending and it's not going to hurt the economy, it's crazy. So, and when you hurt the economy, it's not really good for, the incumbent president and his administration, even though, this is his second term. But the money printing is not going to stop. I mean, what is it, $1 trillion of printing every 5 months or something like that? And there's just no end in sight. And when that happens, and when you're looking at, okay, gold's going to do good, and I think you're going to see gold stocks. I think this is going to be the year for gold stocks, especially junior miners. Because if we go to 3,000 on gold, which I think we do, these things are going to go a lot higher. They're going to get taken over because there's just been so much underdevelopment in gold for the past decade or longer. They're going to need the supply of gold. I mean, everyone's ramping up supply like crazy. I just saw all the gold companies report. I saw Kinross report, and they're shutting down their operations in what is it, in Africa? Because they produce a shitload of gold. And
way to put me on the spot.
And they did it in an area that's one of the biggest things. We have 5 big rules. I'll go over them a different day because we don't have enough time here. But one of them is make sure you're buying gold stocks. Make sure they're in a friendly jurisdiction. Yeah. Unfriendly jurisdiction, they started generating, just producing gold. And the government's like, oh, we're going to keep that now.
Yep.
And it happens time and time again. And you have to learn a lesson the hard way, which I did as well. But even when Kinross, which is like, one of the kings of the industry.
This dictator lied to me.
I can't believe it. I mean, we had a deal in place. Well, I don't understand.
It's just scumbag.
Yeah, so I said GoVX is going to zero. I said that one was 30 cents. It's 3 cents. It's still incredibly overvalued because all their properties are in Africa, and those things will never get developed ever. But they're going to be making $200,000 a year. That management team, which is fucking incredible, and a lot of heavyweights on that management team. But they're full of shit and been robbing investors for a long time. Just that's one of the biggest things. Make sure it's in a mind-friendly area. This way you don't have to worry about this bullshit because then when you produce, and this is Barrick, right? This is like, this is like one of the big 7 technology companies getting it wrong. And they got it wrong here. They're supposed to have the smartest people in the room and have the best contacts, and they got that wrong. But they're all producing. Kinross, they saw Beta Gold, Equinox, all these, they just, like the gold numbers, they're just producing like crazy. They're going to need to find gold. And as gold goes higher and Bitcoin goes higher, I don't see those two trends stopping anytime soon because, even though they're going to try to cut the budget, it's not going to happen. That's one of the things we're going to talk about again. That live event, Becoming a Crypto Millionaire in 2025. It's free to attend. If you're already a sub, attend it as well for Crypto Intelligence. Again, we're going to have a special offer for Crypto Intelligence at the end, but Daniel and I do it live, and we have a really cool Q&A. You can ask, whatever you want. Any crypto, anything. We're having a couple beers in the Q&A, and we have a lot of fun. And usually, I would say 80% of the audience stays on for that extra hour and a half, which is, I wish you didn't. This way we can go and have some fun because it gets late. But we stay there as long as the people stay there and we answer your questions. And the questions coming in are great. So if you want to attend that event, please do so. And that's going to be Thursday, 7 p.m. Next Thursday on 23rd. So other than that, I think we covered a lot of shit today. We did. I love earnings season. Earnings season just beginning with the banks. You got, again, the economic data coming out. Bank of America's reporting tomorrow, but now you're just going to see a whole slate of earnings. And let me tell you something, guys, pay attention because this is the driver of stocks. That's if that doesn't happen, if we don't see earnings growing, because earnings are expected to grow tremendously because we're at expensive valuation. We're not expensive if we're going to get the growth that we're expected to see in 2025 or next few quarters as well, which is definitely double digits. We're not that expensive. If we don't get that, that's when we could see a market sell off significantly, 10, 15, 20%, if we see this earnings season or next earnings season drop off because expectations are very, very high. If we get those earnings, we're not that expensive. Yes, we're expensive historically, but we usually grow earnings 7, 8%. We're expecting to go around 12%. So a 20, 21 PE is not that expensive when it used to be 17, 18 because we're growing earnings much, much faster. You have to take that into account, and the economy is doing pretty well, right? So we need that to keep up in order to keep these valuations, or you're going to see the market fall. So earnings, please pay attention. I think you're going to see a lot of volatility in daylight here for you to cover that, and it should be pretty fun over the next couple of weeks. So, yeah, other than that, I think tomorrow was Tune in tomorrow to our wonderful podcast, Wall Street Unplugged Premium. And again, questions, comments, feel free to email frankcurzioresearch.com. Daniel at CurzioResearch.com. All right, guys. Thank you so much for tuning in, and we'll see you tomorrow. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. The big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.